So that was my reasoning behind looking at that sector. Now, what is my exit strategy? Hey guys, welcome back to the channel. It's Friday. I hope you're well. I hope you had an amazing week. Today is supposed to be my day off, but it hasn't quite worked out that way. In fact, the video that you're about to watch is not the video that you should be watching today. Plans have changed and yeah, it's been a tough week. Let's put it that way. So in today's video, I'm going to fast track some content from last week, well, from next week that I was going to do midweek next week into today. And we are going to talk about some stocks that I bought recently and how I did the research to actually find them and why I bought them. I'm also going to show you how they've actually done since I bought them as well. Now, as always, guys, when I do these videos, I do want them to be as informative as possible, and I want you to take lessons from them. So please just don't look at this and be like, oh, Peter's bought this stock, I'm going to go and buy that stock as well, because that would be irresponsible. That wouldn't be wise. What I'm going to try and do here is give you some nuggets to empower you for when you're looking to research companies and branch out to new sectors, branch out to new companies. So please stay to the end of the video. You're going to get a lot of value from this. I'm going to keep it very high level, very, very brief. Let's get going. All right, now listen, I've kind of alluded to this already, but I'm going to say this again anyway, because I have to say this. Please do not go and copy what I've done on my portfolio. I understand what level of risk I want to take. I also have some experience in the industry. If you are new to this, then this probably isn't the most prudent approach for you. But the lessons in this will be my logic, which I'm going to talk about, why I chose to go into this sector, my exit strategy, and how I did research. That's the real lesson here. So please pay attention to those elements. So what companies have I bought at and what were my reasons for buying them? One of the first companies that I bought two, was Canopy Growth, and the other was Village Farms. Now, for the purpose of this video, I'm going to be talking a lot about Village Farms. I'm going to show you how I researched that because I have more shares in that company than I do Canopy Growth. I follow a lot of news. And over the last month or so, since the Biden-Harris administration was sworn in the States, what we know is that there has been some speculation that they are looking to put on the agenda the idea of essentially legalizing cannabis across the entire United States. So it's not just going to be legal in places like California. And so with that being said, and knowing that that is actually on the agenda, I went looking for companies in the cannabis sector that I could basically purchase and hopefully make some money on in the next 4 years. So that was my reasoning behind looking at that sector. Now, what is my exit strategy? We know that a presidential term in America is 4 years. So when I bought this, my intention is to essentially hold this for the next 4 years until the end of the administration, where I then take a decision as to whether I'm going to keep, sell, or maybe buy more of that stock. When I say 4 years, actually year 3 is going to be pivotal for me, because if they're able to pass the legislation in year 1 and 2, that's a pretty good indication. If they get to year 3 and they haven't been able to pass this, that may indicate that it's not going to happen, and I may need to then rebase, research, and just reevaluate what I've actually done and what I've bought, and whether the stocks are up, whether the stocks are down, the future prospects, so on and so forth, as to what I want to do with the stock at the time. But my intention right now is I bought it, I'm going to hold it for the next 4 years with a 3-year review date in mind. Now, with that being said, I'm going to go into Trading 212 right now, and I'm going to give you an overview of the portfolio, well, the stocks, those two stocks specifically, so you can kind of get an idea of how they've actually done since I bought them. I'm also going to show you my history as well, so you can see at what points I actually bought these stocks as well, so you can actually verify some of the growth too. So this is my portfolio right here. So the first one that I bought was Canopy Growth, and that one is currently trading at $40.65. It's actually down at this point in time, 22.13%. But since I actually bought it, it's up 20%. So I've made $93 or pounds, I should say, on Canopy Growth specifically. I did buy Tilray as well. I'll talk about that a bit later on. I didn't want to highlight this one today because it's up 134%. So I don't want to, you know, lead with numbers because I think that is potentially dangerous. The other one I bought, which is the one we're going to focus on, is Village Farms. It's currently trading at just over $16. And in this one, I've got just under 79 shares. I'll be adding more to this portfolio as we go along as well. Now, I'm just going to go into my history because I bought this around about the 19th of January. So I just want to show you what I bought it at so you can verify the numbers. Bear me 1 second, it's all the way down here. There we go, Village Farm. So as you can see, I bought this on the 19th of January and I bought it at $13.40. So pretty good growth for the short period of time that it's been in there at this point in time. But how did I do the research? How did I arrive at the decision to buy these stocks? Well, my train of thought essentially was this. Whenever you're going to research a stock and you look at a particular sector, you have to know or understand a little bit about the sector. So I had a look at the sector, I had a look at the players in the sector. Now, naturally, there are more than just two companies in the cannabis sector. So for me, I wrote down a list of companies that may fit my profile, what I'm looking for, and then I whittled down from about 5 companies in the end down to the 2 that I have bought. Now, how do you go about doing this? Because one of the biggest questions that I get is, Pete, how do you research stocks? Where do you begin? How do you start? I'm going to keep it very high level in this video because I want to make this brief, but I'm actually going to build a course specifically for that. I'm actually going to bring in the help of a former investment manager who is an ex-colleague of mine who managed £200 million for a big investment house here. We're going to go through a detailed course of examples and everything like that. That will come a bit later on. But for the purpose of this video, I used a tool called Simply Wall Street. And I'm just going to go into that tool right now just to give you an overview of essentially what it looks like. You don't want Binance. And some of the key factors that I had a look at. So this is Simply Wall Street. I've already loaded in Village Farms. And they give you data in a really nice, easy to understand format. And it's easily digestible as well because they use like pie graphs and all this kind of stuff, right? So this is an executive summary. So they give you some key indicators, some rewards, and they also give you some risk analysis, very high level. Now, one of the key things for me was that this company at the moment, and when I bought it as well, was trading 86.6% below their estimate of its fair value. Now, when people buy stocks, often the question is, well, what's a fair value for a stock? We talk about this a lot with Tesla, right? It's overvalued, it's overvalued, it's overvalued. Yes, that is an important indicator, but it's one of the indicators, and you have to be comfortable with the amount that the share is being sold at because you effectively don't have any bargaining power. You have to be willing to pay that amount. So the question is that a fair price for you? At the moment, according to analysts, and we'll get into this a little bit more in a moment, this stock is undervalued, and that was very attractive to me. Earnings are forecast to grow 52.36% per year. We're going to talk a little bit more about that. You also have in here some risk factors, highly volatile share in the last 3 months because people have been buying and selling it. Significant insider trading over the past 3 months. Again, people have been buying and selling it, and probably people within the business and within the sector as well. And shareholders have been diluted, which is what you would expect when new shares are being created and people are buying stock. One thing that I do love on this is the snowflake analysis. And essentially what it does here, it just gives you a very nice pictorial indication of the company overall across a number of areas. So future, past, health, dividend, and value. And look, it's got a really, really good weighting in terms of future, really, really good weighting in terms of health. And you would say a decent weighting as well in terms of value when you're actually buying the company. And, you know, you can download this guys. I don't have an affiliate link for Simply Wall Street, but a membership, I believe, is like 59 quid. I paid 59 quid for a year's membership, and you kind of build your portfolios in here. I will do a separate review for this tool specifically. So going down here, you can see the share price, and you can obviously follow some of the news as well. As you can see, it's grown quite a bit over the last month or so. It is trending down a little bit at this point in time, but, you know, it is what it is. Volatility is always a key thing. And with that being said, I do want to talk about this little thing here. So it talks about price volatility versus the market. And what it does, it tries to benchmark the volatility of this particular stock against the market standard. How do the other shares or companies within the sector how do they gauge in terms of their volatility, right? That's what it's trying to tell you. So on this graph, you can tell that it's very, very volatile. The industry as a whole is very, very low. It's in the green. So this, again, is a key indicator, something that you actually need to consider, because ultimately, I'm happy with the level of volatility that this stock has attached to it, because again, I am buying and holding this for 4 years. I'm not looking to trade this on a day-to-day basis, looking to scalp short-term returns. So I'm comfortable with the level of volatility that this is going to have because I'm holding it for a period of time. I need to plug my phone in, guys. Bear me 1 second. So that's a key indicator for you, and that's a question that you should ask yourself as to whether you're happy with that level of volatility. The other thing here is the valuation. We've already alluded to this a little bit. So currently it's trading at about $19. They believe that a fair price for this stock is $148. So for me, again, I believe that there's a little bit of room for growth for this stock. And actually, I'm getting in at a reasonable price in my estimation. You may think something differently, but I believe that, for me, buying into an industry that I don't smoke, I don't particularly understand that much. I've done research on it, but I believe it's an opportunity. You have to try and make sure that you can get into a company that you feel you can buy at a bargain, at a discount, at a good deal. And I believe that this is a good deal for me. One of the key indicators that really impressed me for this, and this is one of the big reasons why I bought this, is yes, it being undervalued is fantastic, but the future forecasts and indications, future growth is very, very important. So I talked about having a 4-year investment time horizon for this stock. And you can see here that according to this, the earnings and revenue growth running up to 2025, which is essentially the end of the Harris-Biden administration, has revenue increase quite significantly. It's forecasted 52.4%. You can also see as well that the earnings are going to increase as a result of that. You can also click on the free cash flow, which is very, very important, and everything is trending up. So these are my reasons for actually buying this stock. I believe that if the forecasts are correct and revenues are going to soar, with revenues soaring, as long as they can keep their costs down, they should make profit. When they make profit, the share price should then actually go up as well. I bought it at what I feel is a good price for the stock. I plan to buy more. I have an exit strategy. So again, I have a 4-year time horizon for this, with a review in year 3, depending on what happens in the first 3 years of the Biden-Harris administration. I believe if they do pass legislation to legalize cannabis across the United States, this company will be one of the beneficiaries of this. And for me, presents an opportunity to make money, for me to get a good return on the money that I invest. And essentially, that's what investing is all about. You want to make a return, but at the same time, you have to acknowledge the risk. The risk is I could be completely wrong. I could lose money. I am okay with that, because my approach when I invest and buy individual companies like this is not all of my money is going into this company. In fact, a small part of my investments go into this company. I certainly operate a core satellite approach, which is what I believe is the most efficient way for you to get market diversification, but still be able to dabble in companies that you believe offer significant opportunities. For me, I believe that Village Farms, Canopy Growth, and Tilray offer opportunity within the cannabis sector. So guys, there it is. Let me know what you think in the comment sections below. Was this useful? Did I miss anything? Do you think that maybe there should be something else that I should have considered that I've not covered? Again, I'll try to keep it very, very high level. We'll do a video separately about simply Wall Street and actual research very, very shortly. But let me know what you think. Was this useful? Was this not useful at all? Are you looking at new sectors? How do you go about researching your stocks? Let me know in the comments below. If you've not listened to the podcast this week, there it is right there. Make sure you go check it out. As always, I'm so thankful that you listen and watch these videos. You guys are awesome. And just the comments and the questions that I get and are just amazing. So thank you so much. Have an amazing weekend. Remember, money is a tool. Life is for living. I will see you on Tuesday.